Donald Trump won the US election, and for Elon Musk and Tesla's stock, that is amazing news. Tesla's stock jumped after the results of the US election, going up as much as 39% after the results. Long-term shareholders and gamblers looking to bet on the results of the election were all very happy with these gains. Tesla's stock had a rough first 6 months in 2024, at one point being down more than 30% on the year. It was just bad news after bad news. For example, earlier reporting an 8.5% year-over-year decline in first quarter sales. Now though, with this recent rally, Tesla is up almost 30% year to date, with more on the way, and I mean a lot more. Let's talk about it. Tesla's stock rallying after Donald Trump's win shouldn't surprise anyone that's been paying attention. Elon Musk, the CEO of Tesla, spent an estimated $132 million to get Trump and other Republicans voted in during the recent elections. Of course, that wasn't simply a favor or because of Trump's stance on reproductive rights. It was because Donald Trump winning would be advantageous for him as a billionaire in America and for his companies like Tesla and SpaceX. But how does Trump becoming president specifically benefit Elon Musk? If you've been watching the markets lately, you know that Tesla's stock has fallen recently, at least partly because of the news that Trump would be killing Biden's $7,500 EV tax credit. We just explained that Trump becoming president would benefit Elon. So what the hell is this news? Biden's $7,500 EV tax credit was supposed to be a huge incentive for people to buy electric vehicles. It worked like this. If you bought an electric vehicle that was made in North America and falls under certain price limits, you could knock off $7,500 off your taxes. That makes EVs a lot more affordable for regular folks. The goal? To get more people driving electric cars and to boost manufacturing jobs in the US. It sounds good for EV makers like Tesla. So why is Trump ending the incentive? Elon Musk himself said it will only help Tesla. Let's talk about how. The tax credit helps EV companies keep prices competitive with gas cars. Tesla is in a unique position though. They're basically the only car maker in the US making a profit on EVs. Big names like Ford and GM, they're losing money on every EV they sell because they don't have Tesla's scale. Tesla used to lose money too, back when they were just starting out, but now they're one of the most profitable automakers out there. If the credit goes away, EV prices might drop across the board. That would hurt Tesla's profits, but wouldn't sink them like it might for other automakers. Companies like Ford and GM could even pull back on their EV plans just to avoid bigger losses. Less competition means Tesla stays on top. This advantage won't last forever though. Take General Motors for example, who are on track to stop losing money on EVs by 2025, which is right around the corner. Other big names like Ford are behind, with the company reporting over $1 billion in losses during the first 2 quarters of the year. On the other side of competition, there are smaller names like Rivian and Lucid, but they're only holding on thanks to outside investments. These companies will only struggle more, with being inevitably forced to lower their prices to compete with gas cars. And that is why Tesla benefits from these changes by Trump. Moving on. Earlier in the year, it was reported that only 34% of US consumers plan to purchase an electrified vehicle, meaning fully electric, plug-in hybrid, or hybrid as their next car, down from 48% in the 2023 survey. This was just one piece of the bad news among the list of issues EVs faced in recent times. It's worth mentioning though that despite this, Kelley Blue Books reported that EV sales jumped 11% year over year, and that the EV market share in the US climbed to 8.9%, up from 7.8% last year. EV sales will continue to go up, but that may not be what Elon Musk and Tesla are really betting on. Remember earlier this year when Tesla announced their robotaxi and cybercab, and the reception was, let's just say, not good? Well, Tesla's self-driving software is only getting better with updates every other month. Tesla fans are eagerly awaiting the next major update, FSD version 13. Elon Musk himself hyped this up, saying, "We expect to see roughly a 5 or 6-fold improvement in miles between interventions compared to 12.5, and actually looking at the year as a whole, the improvement in miles intervention we think will be at least 3 orders of magnitude." So that's a very dramatic improvement in the course of the year, and we expect that trend to continue next year. Tesla is inching closer and closer to fully autonomous cars, and it wouldn't be crazy to say the primary reason for this is for the sake of their robo-taxis. While Elon has teased this idea for years, it may really not be too far away now. Elon Musk revealed this, saying, For Tesla employees in the Bay Area, we already are offering a ride-hailing capability. With the development app, you can request a ride and it'll take you anywhere in the Bay Area, he said, noting that these employee test rides include safety drivers. This is trouble for companies like Uber and Lyft. Tesla will directly own the vehicles and the software that allows them to drive autonomously. And let's not forget, they have access to an even greater fleet of cars by allowing owners to have their cars make trips. Whether or not they choose to create an app of their own or partner with an existing company remains to be seen. Either way, this is very bullish for Tesla. Donald Trump will only make the path to this easier. Reuters explained it best. At present, Tesla remains years behind rivals in California, by far the car maker's largest US market and a primary testing ground for autonomous vehicle industry. Other companies have navigated California's regulatory maze and completed millions of autonomous vehicle testing miles under state oversight, according to our Reuters review of state regulatory data. If Musk can succeed in securing federal regulations or laws that preempt state oversight, experts in autonomous vehicle regulations said it could allow Tesla to sidestep regulations in California. The future is bright for Tesla with Donald Trump as President of the United States. It may be worth it to consider increasing your position size as soon as possible. And if you don't have a position at all, well, I don't know what you're doing. Be sure to subscribe for more updates.